Good morning, everyone, and welcome to the On Time, On Target Morning Brief. We're coming at you live this morning from lovely San Antonio and the iconic Riverwalk, where we're right at the Marriott at one end of the Riverwalk on the River Center area, where it's a little bit of a brisk 40 degrees this morning. So nice and chilly out here, so we're not going to spend too long. But we do have a great show for you this morning. We're going to get 2021 kicked off right. We're going to talk about investing plans and how it's a little bit different than any other endeavor in life, where for both your investment and your trading plan, it's hard to set exact financial goals because you don't know what the market's going to give you. But we're going to peel that back a little bit more throughout the show today. But so far, the futures are in the green, so things are looking good for getting a good start off to 2021. If you're catching us live, thank you so much for stopping by. If you're catching us on replay, make sure to like and subscribe and hit that notification bell so you get notified throughout 2021 every time I put out a new content. So with that, let's go ahead and get the show started. All right, good morning, everyone, and welcome to the first On Time, On Target morning brief of the new year. Hopefully you enjoyed the intro there from the Riverwalk. All right, make sure you have your Q&A window and chat window set up appropriately. Hopefully the sound is okay. I'm not in an optimal position this morning for that, but go ahead and give me feedback in the chat if there's anything that is particularly bad about hearing me this morning. For a standard disclaimer, this is a financial education presentation. Make sure you don't do your own due diligence before you would make any decisions with your portfolio. Full disclaimer information is available at ototnow.com. All right, January 4th, and the futures are in the green pretty significantly, almost 0.5% or so. So kind of a exciting new start to the new year. We'll see if that holds. We'll get to that here in a minute when we talk about the specific market stuff. As far as our mission objectives, I'm going to slow down here for a second and talk about our long-term investing topic is the investing and trading plan for each year. Now, a lot of people don't have these, and a lot of people say, well, you need to have these, right? Because it's New Year's, it's time for reflection. I'm going to do better with my health, or better with my school, or better at my job, relationship, spiritual relationship, whatever it happens to be. It's a time for reflection. So if you were going to go in and make an investing plan, here's where a lot of people make mistakes is they will set specific goals. And if you set specific goals within an investing or trading plan, you can kind of get yourself in trouble. And here's what I mean by that is when you look at our mission objectives, grow our money, protect our money, and live off our money. Well, let's talk about that first one, grow our money. You could go into 2021 and say, I want to make 30% in the market. Like, well, yeah, I mean, it fits goals. I mean, it fits the SMART goals, right? Of measurable, and it's against a time, and all of that is fine from a goal setting perspective. But where that fails you significantly is say you make 30% on January 1st or January 4th. So today the market goes up 30%. Are you really going to cash out and take the rest of the year off because you met your goal on the first day? Well, no, that would be dumb, right? Investing is a lifelong pursuit, and it supplements your lifestyle. And then the other way around is if you said, okay, I need to make 30% for the year, and you're down 5% on July 1st, Are you going to double up and triple up and take your risk through the roof to be able to now earn not only that 5% back, but also an additional 30% in those 6 months? I mean, all that's kind of insane. So when you really zoom out a little bit from investing, where it's different is the time frame is arbitrary. It is, instead of measuring it over lifetime, which again you don't know when that's going to stop either, but if you measure it in a calendar year, well, that is arbitrary. Those dates are arbitrary. There's nothing in the market that's tied to those. Some reporting, maybe you could say, but you have to report every quarter. So, there's really nothing different between January 1st and December 31st than there is between July 1st and June 30th. Um, so, and what is one, if you make 40% in one year and then you lose 2% the next year, now have you failed to meet your goals, even though your goal was 10% a year? So you can get caught up in numbers. And that's one thing that drives people crazy with investing is, it's not like I want to run 3 miles a day every day for January. I mean, that's measurable and achievable and you can do it. In investing, you have to really take what the market gives you, especially if you are a total return investor. You have no idea. I mean, none of us called 2020, with a hey, in January we're going to start talking about a global pandemic. But as soon as that opportunity presented itself, and if you were following along then, which most of you were, except for my younger folks that are in here, um, that was an opportunity, and you didn't know it was coming, but you had to be ready for it. So that is far more of the investing plan, is to throw some themes out there like I have with cybersecurity, clean energy, infrastructure, those sort of marijuana, legalization thereof. Those are themes that you have in place, but what you don't know is what's coming next. And when a market starts selling off because of the pandemic, you have to reassess all your themes. You have, and say, are these going to be hold true? Are there new ones, such as the work from home, stay at home environment? So Amazon's, Home Depot, some Zoom, Peloton. So immediately some names come to mind because the circumstances change. So that's where having an investing plan or I have clients that are like, or potential clients are like, well, what can I expect, annually? It's like, well, here's what you can expect is I'm sitting here in the chair every day looking for opportunities. Sometimes there are a bunch, kind of like trading. Sometimes there are ample opportunities out there. Sometimes there really aren't any. And if you try to force it, generally you get burned, like in any other endeavor in life. So when you think about I can tell clients you can go back in time, and traditionally markets have made 10 to 12%. Traditionally, a more aggressive slant, which I have for most of my clients, risk tolerance depending, has netted, 18, 20%, or even higher on good years. So some amazing results, but that's because the opportunities presented themselves and we were ready for it. That's not because we said on January 4th, hey, Steve, let's get together and make 30% this year. I have no idea if that's achievable or not. And honestly, to make outperformance, much like 2020, you really need horrific conditions of volatility. So I don't know if you may enjoy it on when you were looking, a few days ago on December 31st about how your accounts did this past year. You may think, well, that was fantastic. But if you remember the process of sitting through that, the process was not fantastic. It was quite painful. And same thing with, if we would in 2021, the best thing that could happen is another huge sell-off, which means, second strain of coronavirus. It means something happens to Biden in or around the inauguration. So careful what you wish for, right? It's not all about making money, but what we want to do is we're prepared to move and we're act on situations when they present themselves. So that's why it's so hard to put a plan in place. We switch into trading plan. For a trading plan, all you can do is what we talk about every day is really set that risk unit and then look for opportunities. And if the opportunity presents itself, like today I put in the chat room, 2 longs and 3 shorts. And it's like, I don't know if they're going to set up or not. I'm not all that excited about them. We're going to take a look. We'll follow along. But, it's a Monday. Mondays are traditionally bad. We don't really have a huge headline up there except for maybe Jack Ma is missing. That's exciting for Alibaba. Um, so all investing, as Predator's bringing up there in the chat, yeah, you want to be diligent about making contributions, that sort of thing, and in trading, sticking to your risk unit and not sitting there trading all day long, just making, whatever the math is that you put in place. Ours is risk 1 to make 3. And if it doesn't happen, we're out and we're done. And you cry it out if you're still in crying phase. If not, just you say, okay, log out, move on, right? So you need to stay true to those sorts of things. So yes, good point there. Project out 20 to 30 years. That's financial planning. Whenever I project out, and I sat down with Berner not too long ago, and yeah, my projections for Money Guide Elite are going to sit there and project out a 6%. And even at 6%, you can see that, once you crack, money makes money, right? So once you crack into 7 digits, it goes up significantly from there. Like it takes half a lifetime to get to 7 digits, but once you're at 7 digits, you can double. I mean, it's on a tear from there. So, and that's even at a 6%. It'll show you that, how much you're going to be worth 20, 30 years from now. Let alone if you have an opportunity that presents itself to where you can make more. There are also losing years in the markets. We just haven't had those in a couple decades, other than 2007 and 2009. But that also happened. So again, as a money manager, if the whole market loses 12% in 2021 and your account's down 5%, you may be mad. I'm not. I'm slapping high fives, right? Because that's, I'm trying to outperform the market. And there were, situations that we take a look at it as it presents itself and we do our best to navigate it. So anyhow, just some food for thought there. That's all when you're talking about growing your money. When you're talking about protecting your money, which is a different philosophy, there you are intentionally giving up the upside of total return of the market, and you're putting hedges in place. And when you put hedges in place, you have to think to yourself, I'm intentionally paying money, or you're either outright paying money if you're buying puts, or you are maybe selling some calls. It's like that. I'm probably giving up outperformance of a more steady performance. So that's where we put those things into effect. And you notice I haven't sold any calls in forever, right? Because the market just keeps going up, and I don't really see a reason for it to top. Things are a little bit, you get that irrational exuberance going. We don't want to fight that. You just want to take a ride along the way. But if you get into pure money protection, for those of you that are in the room that have, sizable bond positions, which there's at least one of you, that you're in more, protect the wealth, right? And when the market's screaming higher at 15, 20%, and your bonds are slaying it at 4%, that was intentional. That is to grow that money. That is kind of the dry powder. That is the, protecting from the downside, which comes at a cost. And then the last one to talk about is live off the money. If you're in retirement, and now you are using, you say it's a $2 million portfolio at 5%, that kicks off, 50,000 per million, which at 2 million, that would be 100,000 a year. So if you are, no kidding, living off this portfolio because it's going from Schwab or TD Ameritrade to your bank account on the first of the month, along with everything else out there, then you are definitely giving up upside, because then you're going to be in names that generate income like AT&T, which has been a year after year after year money loser, or, other big companies out there that pay a big dividend, ExxonMobil. Oil's been in a house of pain. So you're definitely giving up total return upside if you are living off your portfolio. So that's why sometimes you can bucket that out and say, okay, well, I'm going to live off this million and stay total return on this other million. And, those are kind of disciplined math concepts that put in place. But so when you have an investment trading plan for 2021, it's like, people are asking me, what's the plan? I'm like, well, the plan is we're going to invest in these themes, and we're going to keep an eye on it every day and see what happens. So some people aren't as satisfied by that answer, but that's a little philosophy. And then lastly, we'll talk about what settlement time means here in a minute. All right, let's get out shared to you where we are in the world. So we'll go around the headlines here. We'll go around the world real quick. CNBC.com there coming at you. All right, you see the futures in the green there. We'll go ahead and refresh those real quick. All right, looking around the world at Europe. Ooh, look at the huge numbers in Europe. Goodness. Travel stocks up. That's pretty optimistic. I'm not quite as optimistic there. Asia's split. Our numbers for Friday aren't listed. There's the bonds number, 0.945. Oil holding at 48. Gold. Gold and silver both upstart in the new year. Look at these all the way across the board. Don't really, okay, saying the dollar's faltering. Okay, I'll buy that. Bitcoin's a little bit of a wild ride. It got up to 34,000 this weekend, then shaved 10%. So it's a net minus 3% from Friday. But when you take a look at, all weekend long, Twitter was blowing up with the Bitcoin mafia about how Bitcoin touched 34,000. Well, it didn't hold there. So that's all I've got to say about that. All right, let's go over to bring up the market here, and we'll take a look at, why is this not coming up? I'm not going to do headlines today. We're going to take a look at where the market's been. Here we go. So here's our year in review. Again, pretty toppy and going up from here. Sometime during 2021, there's going to be that 5 to 8 to 10% reset. Don't even sweat it. It's coming. So don't get excited about it when it does. Now, we're going to take a look about why that's happening and if it has further, to fall past out of that zone. But you won't see me get excited if we sell off even up to 10%, just due to reversion of the mean. I mean, there's a lot of gains in here. A lot of people are profit taking as well. Here's our run up going into it the past 5 days. Here you can see that the last trading day of the year ran up. I was kind of surprised about that. But then again, a lot of new money. I mean, it was blowing up all weekend, people making their IRA deposits. So that's only, 6,000 or 7,000, depending on your age. But that adds up when you look at like everybody in the US who invests generally is doing that. When you get started, you're trying to put in 100 a month, 200 a month, whatever. Sometimes you max that out, 7,000, that's 583.33 a month. Once you've kind of made it, you're just simply putting in 6,000 or 7,000 on January, 1st, right? So that's what everybody's doing now. If you haven't done that yet, it's time to do it. So a lot of money flowing in, kind of selling off into the open. So we'll keep an eye on that. Okay, going over into our day trades for the day. We'll go ahead, and I'm not going to bring these up on a side note, but from a long perspective, Tesla almost met its numbers. So Tesla's kind of taking the whole EV space higher. The one I like better is NIO, also met their numbers, but NIO and XPEV, both Chinese automakers, both are gapping up, not only off Tesla news, but they've also reported their end of year news. So that's why NIO is my number one. You're looking at a 50-cent stop if you get in on NIO. And again, I'm not super excited about trading on a Monday, first day trading day of the year. We may not get the move that we want there, but certainly that's one we're going to keep an eye on. And you see over here to the left, that's our futures kind of leaking. So a little bit of negativity creeping into the market. On the short side, you see three names there. The one I kind of like best, even though I like it long term, and you may even be a holder of this, and you're like, why would I be shorting a stock that I'm holding? Well, remember, different strategies, right? We're holding BABA for the long term because we believe in the name, and we believe, it's the Amazon of China and the super huge middle class and the fantastic economy that they have over there. But the negative headline associated with BABA this morning is Jack Ma, the former CEO, I believe he's former CEO, now chairman of Alibaba, is reported missing, which is kind of interesting. Maybe is, maybe isn't. I mean, he's a billionaire, so people don't always know where he is. But let's take a look at that on the short side. That would be a get in and get out in the first few minutes if we take that. So with that, let me go ahead and get things set up. We got about 40 seconds to the open. Welcome everyone to the On Time On Target play of the day. We have two plays for you today. We have NIO, which is a Chinese EV automaker long, and we have Alibaba short because their chairman might be missing. So with that, here is the opening bet. And 2021 is now underway. You see the market on a 1 minute all the way to the left. We'll zoom in on that a little bit here if I can. Yep, there we go. This is your gapping up a NEO of 5%. See if we can zoom in on that. And then over here again is Alibaba that I talked about. It's only down 2% now. So maybe the market's completely blowing off that news that the CEO is potentially missing. If you do take Alibaba again, you're looking at about a $2.50 stop. So that can be a challenge. And again, don't really know what I'm looking for there outside of if it starts down. I would need it to hit 26, to even consider taking a short here. So if we hit 26, we'd have to put the stop above the high of the day, which would be about 28 or so. We might be able to get away with a $2 stop. Well, it looks like it's going to go for us. So let's go ahead and take Alibaba short. So there it is. There's our entry point at 226. So stab it somewhere in there where you get it. And then we're going to do a $2 stop and go up here at 28. So again, we're setting that above the high of the day. And then our first stop is going to be 224. 222 is the second R unit, and down to 220 would be the third R unit. I don't know if we'll get that today, but I don't think a lot of people are going to buy into this in the first few minutes. So again, we're in at 220, 226, excuse me, short. So we'll just keep an eye on that. Looks like NEO's flipping back higher. Didn't get in on that. Let's take a look at XPEV. It's doing about the same thing, up 5% or so. Let's check Luckin Coffee while we're right here. Up 2% for Luckin, 868. That's not bad. And another name that's been selling off hard lately, Palantir. It's down again. So not really worried. Remember, it came out at 10, went up to 30. Now it's down to 23. That's not uncommon for things to do, a retracement like that as they set up to go higher. So I'm not worried about Palantir. I think it's a great long-term hold. All right, let's take a look at some other names. We'll switch back to short here. HLF is Herbalife. Excuse me, my voice cracked there. So not much going on volume-wise in Herbalife other than it did gap down earlier. Carl Icahn was an activist investor, and he bailed out and sold all of his shares. So that's why it was down earlier. It's not down now, though. And then KOLD, which I don't know what they do, KOLD, but this is a continuation short. This thing has been selling off. If you could go back, it was up at like 60 or 70, and it just continues to sell off. So down another 6%. I looked for the storyline and couldn't find one, but it continues to sell off. Okay, so our trade's doing fine. It's a little bit in the green. Again, we'll keep an eye on that. Market's still in the green on the day, but you can see the big, what's this, 4 minutes into the day, almost 4 minutes, and we're on our way down there. Okay, let's go ahead and take a look. So pull up the trade on the other screen there. Again, we have our stop at 228 above the high of the day. We're going to take a look around at other investments that are going on. All right, Clickstream's up a little bit. GNOG is a name we talked about last year quite a bit. It's weird to say last year. But remember, this is Tillman Fertitta, if I'm saying that right, the owner of the Houston Rockets. He has a SPAC called Lancadia Holdings. There's like 3 of them now. This is one of them that transitioned into Golden Nugget Online Gaming. So you see that it's up 7% now that it has its new ticker from last week. DXC is an interesting story. I moved in on this. I actually know somebody that left not Arthur Anderson, the new Arthur Anderson, left Accenture to go work for this company. And it's an interesting story. It's executives from all over the consulting world, not just Accenture, again, the old Arthur Anderson, but very powerful folks kind of left and joined forces and started this new company called DXC. So it's really pretty exciting out there. It's kind of way too soon to tell how it's doing, but it's certainly been on fire lately. So that continues. There's our NEO that we talked about. Looks like NEO would have worked long. A couple of psychedelic names, Newmont Mining, BioNTech's vaccine name. Let's see, there's Tesla up at 3%. So Tesla said they could deliver 500,000 cars in 2020. They fell fractionally short of that, literally 450 cars short of that, which is pretty much close enough in anybody's book. So Tesla pumping out 500,000 cars, I mean, it doesn't justify the stock price, but it certainly keeps the excitement high. Okay, laser's another name you know about. That's Luminar. That's the LiDAR technology. VLDR tends to travel with it. I don't see it in here anywhere though. Q-Clean, that's our clean energy play for 2021. All right, let's see what's on the red side for today. Boeing selling off. I mean, you'd think, I'm kind of surprised by that because 737 MAX is back flying. So you'd think that'd be good news. Of course, it ran up pretty significantly on that. MongoDB, Hillian's an EV play, FireEye, cybersecurity. There's your Alibaba. Oop, looks like that is not working for our trade. So let's go ahead and check back on that. Yep, trade busted out there. So down 1R to start the year. So unfortunate, but that is what it is. Moving on. And it's good news for the long-term investment thesis there for Alibaba. All right. So I'm going to bring that down and let's go into our question of the day, which is, get over here to the right place. Again, on my laptop on the road this morning. So I learned something on last week that I didn't know. So settlement dates. So when you log in or I log in and I make a trade, well, there's generally a T+2 is what you see down here for settlement options. So what does that mean? Well, it's all the accounting that takes place because you literally, especially if you're day trading, you literally can go in and jam in 10 to 12 trades within a couple minutes, right? Well, it's going to execute and it's going to show you immediately what you've got. But it takes a while to settle, which means the accounting has to catch up. And if you have so here's where it's interesting is if you're trying to withdraw money, say you have a $500,000 account, so $500,000 account, and you're trying to withdraw $25,000. Well, you can log in, sell your Alibaba stock, which is say it's a 25,000 and change position. So you go, okay, I need to free up some cash. What do I want to get out of? It's like, well, Jack Ma may be missing. So crap, I love Alibaba, but I love everything else in my portfolio because it wouldn't be there if I didn't love it. So it's like okay, I'm going to sell that. So you sell Alibaba and then you immediately try to withdraw your funds. Well, if you have $500,000 account and you sell a $25,000 position, those funds are going to be available instantly. They're not really available because they haven't settled it, but the Schwab or TD Ameritrade is basically going, okay, this person has $500,000 with me. I know they're wanting to withdraw their money before it's technically settled, but that's fine because my little algorithm that says how much money is available to you, says it's okay. Same thing when you deposit, say you get a big check, $10,000 check in the mail for whatever reason, and you deposit it through your mailed, online mobile deposit, and it says, okay, 1,800 is available now while the rest settles. Well, it's the same thing. They're not extending you the entirety of that money in case that check bounces. But so it's kind of in reverse with the account. Now, if you need all $500,000 the next, that today, that's not going to happen. So you can sell the entire portfolio of $500,000 and put in a withdrawal order, but you're only going to be able to get maybe 20% of it today because the rest has to settle before they'll give you your money. Now, I will say that I don't know if individuals have the power, but at least I do, is I can call the trading desk and request an immediate settle. I'm 1-for-1 on this because somebody needed money at the end of the year last year. They had to have it that day. So it's like, all right, let me see what I can do. So if you ever get into a position to where the fund you do need the money, or you think you do, or you really, 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 really want the money, call me because through a phone call from me, I might be able to free up those funds a little faster than you could on your own. So anyhow, that's kind of interesting. It's requesting an immediate settle to where that goes through. Another thing that, see if it's going to talk bond markets in here. Bonds don't settle nearly as fast. So, when I was looking at this situation, I had to sell a security to, a stock to basically get that immediate trade where I really would have rather sold bonds for the person. But anyhow, So a little bit on settlement dates there. That's why when you click balances, and this can be as confusing as everything. And if you remember the Robin Hood kid that was what 22, that ended up committing suicide because he thought he was 700,000 in the red or whatever. This is where that math, when you hit, what's my account balance, you see like 7 different things. You're like, what? That's part of it, right? There's the true market value, which is the only one you should really care about. The rest of it's kind of internal accounting, which can be confusing. So don't get hung up on that. If you ever have any questions, reach out and contact me. So that's all I have for today. Good start for the year. Hopefully the markets stay in the green all day. Looks like that's Europe. So get kind of refreshed over here to the market and see how they're holding up. Once this loads in here, in the red across the board, so we'll see where it goes. So, all right, with that, you guys all set up for a fantastic 2021, and we will see you back tomorrow.